Good afternoon. We're going to go over this past week's trades and the weekly recap. I did finish the week with 19 wins, 3 losses, and 1 flat, which is basically break even for a weekly win rate of 86.96%. So it was a pretty good week. I had 90% win rate all week until yesterday. Friday, I had 2 losers, and that brought me below the 90%. But whatever, I met my goal of 80%, and that to me is fair enough, good enough. So with that said, if you're not in the room, the link is in the description of the video and in the bio section of Twitter and StockTwits and social media accounts and stuff like that. So you can also go on Twitter. You can see all the posts on the daily, the posts of all the trades every day. I do that so you can see the timestamps and see what the winners are, what the losers are, and stuff like that. So just go on Twitter and you can follow along, or you can actually see in the timestamps and stuff like that of the plays for the week. We'll start with McDonald's. Now, McDonald's I had on my watch list for Sunday, and it was just setting up from the hourly, and I knew if it got over like the 209 area, it was going to pop. So, I mean, it did gap up Monday. I mean, it's right here, Monday. I mean, it gapped up pretty good. I mean, from 207 to 210. I was kind of nervous about that big gap up, so I wasn't quite sure if it was going to drop it open and close the gap or not. So I was a little worried at first. That's why I labeled it risky, because it had a huge gap up and it just gap and ripped. So I ended up grabbing the 215 calls at 93 cents at 9:36, which was opening candle. As soon as it broke the pre-market high, I grabbed it. I would have been more comfortable if it, with the amount of it gapped up, that if it actually pulled back and closed the gap then ripped, I would have been more comfortable, because I don't know, to me this just seemed a little too extended, and just the way the market's been lately, that it's just been a lot of fake outs. So I was a little hesitant about this, so that's why I labeled it risky. So they did go from 93 cents to $1.92 in that push on McDonald's 215 calls. Then I had SPY. Let's see. I had SPY. This must be Monday right here. Yeah, the 14th. Now, SPY, this is what I was worried about McDonald's. I mean, it gapped up big and it started to push a little bit and then it just dumped. So I was a little worried that McDonald's would have done that right at open, but it didn't. But anyways, I did get 369 puts on SPY at 1037, which is right here. Now, it popped up, had trouble getting over this area. Where is Monday? This is Monday. As you can see, it just struggles right in this 369.50 area. I mean, it did pop up over it, but it got shut down pretty fast on the 9th. And then when I had this big gap up, usually when SPY has these big monster gap ups, they usually like sell off in the morning before either just completely collapsing or just fills the gaps and just it rebounds. It has a V-shaped recovery like SPY loves to do. So when it started to consolidate or chop around in this area, and we had this big red candle right there and it pushed through VWAP, that's when I ended up grabbing it. So those 369 puts, I mean, look at it. We got it right here, right around the 369.30 area, and those 369 puts were 45 cents. I mean, you're only 30 cents out of the money, and they just went from 45 cents to $4.53 on this monster dump. So that was 1,000% gain on that if you held all the way through. Then I had Disney. I had Disney puts on the 14th. Where are you? Right here. Disney, it just, I mean, where is this? I mean, this is just from the 10th to 11th. Just had a big monster run. Then whenever you have these big runs, I mean, look, every time it gets, see this orange line right here is the regression trend line. That whenever it gets severely disconnected from it, either from the downside or the upside, it likes to come back and retest it. Now, because the trend line is pointing up, anytime it drops below, it's going to get quickly pulled right to it. So it works the same way the other way too. But when I saw how extended, far away it was from the trend line on the hourly, that it started to get my attention. Then it just when SPY gapped up and Disney did not, that was just an indication that it's probably going to dump. But it didn't. So it did a little bit open, but when I grabbed it at 10:58, which is right here. Oh yeah, I remember this because I was grabbing puts right at the double bottom, thinking that it's going to just collapse, because at that point in time, SPY was dumping at what was that? 10:50. Okay, let's see what SPY was doing at 10:50. Yeah, SPY was dumping at 10:50. Yeah, right here. SPY is right here at 10:50. Dropped more, came back up, then it dumped more. So that's what I was basing. I always follow SPY. I like trading stocks that follow SPY. So when it came back down here and tested the bottom, lower day again, that's when I grabbed the puts. It popped a little bit, but it did come back down. So those 165 puts went from 78 cents to $1.33. Not too bad. I grabbed them at 10:58, which is exactly right here on the double bottom. So that was a good play. Then I had Apple. I had Apple puts. Where are you? Make sure I have the right day here, the 14th. Now, I had Apple puts at 10:49, which I bet you is right here. Yep. Okay. You get Apple right here, just staying in this little range, 123 to 150. We'll even say 160. I mean, it's staying in a 40-cent range. It's just doing nothing. And when it starts to, break this little tight area right here, that I started to look at it, and I grabbed the 120 puts at 12.49, which is right here. Pushed through the 200 EMA. And they went from 70 cents to 96 cents on this little breakdown right here. I mean, I was watching this all day long, that Apple was going to make a big move. I just wasn't sure if it was going to be below 122.50 or if it was going to be above 123.25-ish. So I just was waiting for which direction it was going to break. And when I saw this candle, it came below these other previous inside candles right here. And that's when I started to watch the 200 EMA break. And that's when I ended up grabbing it. So like I said, 120 puts, 70 cents to 96 cents. So that was 4 trades on Tuesday. I finished all of them winners. So that was a good day, good way to start the week. Okay, on Tuesday I have BA. I actually sold BA on Tuesday, but I actually got it on Monday. Now, I grabbed it Monday at 141, which is right here. I grabbed it right when it broke down, right in here, and it popped back up and consolidated, and theta just kind of destroyed a little bit. I was slightly red going into the end of day, but I was looking at it on the hourly. It's at the low of the descending triangle on the hourly, so I knew I was in pretty good shape if I held overnight, as long as SPY didn't have an insane gap up and BA take off. I have BA have news or something like that, but as long as SPY didn't have a nasty gap up, I was pretty confident that BA would dump it open, and it did just that. So those 215 puts that I got on Monday, I dumped it on Tuesday morning. They went to $1.18. So that was a nice little flush. I mean, if this flush right here happened back here when I first got in, that would have gone probably 100%, no problem. But timing is everything, and sometimes you think you get something and you just don't. Then theta chops a little bit. And even if you're right, theta just destroys it. So that's what it is. It's part of the game. Baidu was the next one on Tuesday. Now, Baidu had news about getting into the electric vehicle. And I just said, this thing is going to rip. All the electric vehicles are just turning into monster runners. So I ended up grabbing the 160 calls at 80 cents on Baidu, and got them at 940, right when it broke the first 10-minute candle right here. I was a little nervous about it right here, thinking that, okay, it's having trouble in this area, and it just kept ripping. So I didn't hold it the whole way, obviously, but some people in the room held a good majority of it. So those calls went from 80 cents to $8.77, and man, I don't even know what they're worth when if you even held overnight. I mean, I think that someone said in the room that it was like $20 or something like that the next day on Wednesday, but I don't think anyone in the room held it overnight. If they did, well, that's just crazy. Then I had BA again. This time I had calls. I grabbed BA calls at 116, which is right here, I think. Yeah, right in here. Got the cup and handle. You get a cup, you get a handle. Bought the breakout. 240, 250 calls at 93 cents to $1.25. I mean, I didn't trade much on Tuesday. I've just been very, very cautious about getting into trades. I've noticed that the last couple weeks, most of my losses, which I don't lose that much, but when I do, it seems like the most common loser I have is SPY for some reason the last couple of weeks, so I've tried to avoid it this week as much as possible. So just out of test to see how much my win rate would improve if I stay away from SPY for most of the week, or tried to stay away from it anyway. So yeah, so I finished Tuesday with 3 wins, and those were the 3 winners. And then I ended up having struggled a little bit on Wednesday. Wednesday I had McDonald's. Let's see, the 16th right here. Now McDonald's just keeps popping and popping and popping, so it just keeps going and going and going. So I grabbed McDonald's 217.50 calls at 92 cents. I mean, McDonald's it just keeps on tearing on the hourly. I mean, we got it here on Monday, keeps going and going. I mean, I was thinking it's going to get to the 220 area because that's where it likes to stall out on the hourly. So that's where I was kind of looking. So when it broke over the 10-minute candle at open, well, I don't, like I said earlier, I don't trade the first 10 minutes. I let the amateurs have their little fun. Then I buy the breakout or the breakdown of the 10-minute candle, depending on what position or I'm looking for. So in this case, I was looking for McDonald's to break out, and it did. So they went from 92 cents to $1.57 right there. So that was a nice little play. Then I had BA. I traded BA a lot. BA's just been, pretty good on the short side, but not this day. What day? The 16th. Okay. I grabbed 220 puts at 80 cents. 10.15, which is right in this area where I grabbed it. And it popped up, came back down, and it just, when it came back down into here, that's about where I broke even, because even though I got it right in this area right here, and this is lower, the theater just, kind of wrecked it a little bit in this area. So when I got it at 80 cents, I had the 220 puts at 80 cents, and I had a chance to break even, and I just said, I'm out. I just get out. I mean, and if I held it, I think that a couple people in the room held it, and it did reject, come back down, but I don't know if they actually went fully green or not. I didn't really pay attention to it. BA I kind of was annoying, so I just didn't want to look at it anymore and stopped looking. Then I had SPY puts. SPY puts at 201 right here. Let's bring it up. 201. Which is probably right in here now. Right, as you can see, I was looking at it. Okay, it dropped down here, came back up, and it consolidated, and it broke below the RCT trend line right here, this consolidated area, and that's when I ended up grabbing it. So I grabbed the 369 puts at 70 cents, and they went from 70 cents to 85 right there, and I had a feeling it was going to double bottom. It's been doing that a lot lately. It just makes it look like you get this big massive red candle thinking, oh, it's going to dump big, it's going to go to 365, and it gets to double bottom and pop. So SPY's been doing that a lot lately, and that's probably one of the reasons why, if not the reason why, I've taken quite a few losses on SPY the last couple of weeks. And, you know, like I said, I say quite a few losses. I'm only lost a few times each week, so to me, that's quite a few. Then I ended up SPY again. I did take a loss on this. I grabbed 201. Yeah, then I grabbed it again at 220. I don't know why I did that, but I grabbed it here the first time and sold right there. Then some reason I grabbed it again to 368 puts, thinking it was probably going to break, and it didn't, and that was a loss. So I mean, I had a small win here, and for some reason I don't know why I grabbed the 368 puts right there, thinking we were going to get a bigger dump. What day was the 16th? That was Wednesday. It was probably thinking we're going to have a massive end of the day drop, and it didn't. It had a big pop. So that was an unnecessary loss right there. I have no idea why I even took the 368. Probably at that point in time, it probably seemed logical, but after looking at it and seeing how things panned out, I'm just like, okay, that was kind of dumb. So that was a mistake or a loss that I shouldn't have even taken. So that was a dumb mistake. So I'm not afraid to admit my mistakes or show my losses as part of the game. And anyone that doesn't show you everything, you should get rid of them. Let's see. Then I had Thursday. I had 5 wins, 5 plays. The first one was Facebook calls. Let's see. Let's see. Facebook. What time did I grab that? I grabbed it right at open. As you can see right here on the hourly, I was watching this like a hawk. I mean, you get like an inverted head and shoulders. You get a left shoulder, the head, and a possible right. Is this the 16th? Yeah. So I was looking at it from the point of view. It gets over this 200 EMA and gets over this 217 area. This thing's gonna not 217, 277 area. This thing's gonna pop. So they ended up doing that exactly. So I grabbed it right at open. I didn't wait for the 10-minute amateur hour or 10 minutes, and I just I grabbed it. So they went from the 280-250 calls went from 86 cents to $1.77 right there, which was a quick, nice, fast play. Then I ended up grabbing BA puts again. I played BA a lot this week. Let's see. Yep, right in here now. I grabbed BA 222.50 puts at 90 cents at 1009, which is right here at the double bottom. Popped up a little bit. You know, BA just, I don't know which way I'm going to go. It stayed right in there. I was thinking about grabbing it right there, but I was more focused on Facebook at that point in time, which I'm kind of glad I did, because I probably would have got faked out and stopped out. But made a nice little J hook right here, inverted J hook. J hook, it looks just like a J. It goes up, tests the 200 EMA, and just gets slammed. So it makes like a little J hook. So so I did grab the 222.50 puts at 90 cents, and they went to 325 on that drop. So they went 200%, and those Facebook calls went 100% that I just talked about. Then the third play was Netflix puts. Let's see. Which day was it? 16th? 17th? This is the 17th, yep. Now I grabbed Netflix puts at 11:48, which is right here. It popped up big, dropped, and it consolidated. You know, get a little bit of a head and shoulders right here, left, head, and right, and or you can even say descending, all symmetrical triangle right there, if you want to look at it like that. But it broke down below the 20 EMA, which is the blue line, and I grabbed the 515 puts at 71 cents, and then went to 95, just in that quick little drop right there. Then I ended up grabbing Roku, Roku puts. Now I grabbed Roku puts at, let's see, what time did I grab those? 12:26. 12:26, which is right here. Now you can see every time I I show you where I took the play. I don't need to look at each candle and find out the time. I look just right at the chart and say, okay, now I know where I took it. I mean, obviously, you get a symmetrical triangle right here, it broke down, and it made like a little U right here. So I was looking at it. If it came back down, it was going to break, and this is where I grabbed it at precisely 12:26, which is right in this candle right here, right there. And that's exactly what happened. So those 320 puts went from 80 cents to 191, 100% move on that. Then the last play of the day, which was UPS. Now I had a game plan on this, and I'm kind of glad that I stuck to my guns on this, because my game plan was I was going to grab UPS as a sympathy play for FedEx's ER, and I got him at 304. I got the UPS 180 calls at 304, which is right here. Now I got him right there, and I was thinking, okay, I'm gonna grab these. I got them at 67 cents, the 180 calls. So maybe if FedEx has a monster ER, it's gonna take UPS with it. So I was gonna take it and hold overnight. Then I just got thinking, okay, this is what I was thinking with FedEx. One of the things I've noticed with earnings, let me just look at FedEx first of all, the daily, the weekly. I mean, FedEx is just, look at this monster run. I mean, this is because of COVID-19. I mean, everyone's getting everything shipped. I mean, it's at 300 on ER. I mean, back here it was, where was this ER? Right in here. Was 487. You can see right down here. And I was thinking, okay, this is such a monster run into this earnings. Earnings would have to be like nearly perfect or better than expected for them to even keep going after this monster run. So I was just like, okay, I'm a little concerned about that. And one of the other things that I've also noticed is that whenever you have, where is FedEx? Right here. Whenever a stock goes into earnings, if it's starting to rip into earnings, it just ends up being a fake out. I mean, like if it's going hard into earnings and the earnings end up being bad and it ends up dropping and stuff like that, or if a stock ends up selling off hard into earnings, it ends up popping on the earnings. So I'm not saying it's a surefire way. It's 100% accurate, 90% accurate. I mean, it's not. I'm just something I've noticed over the years that if something's running hard into ER, that there's a good chance it's going to dump when ER is dropped. Even if the earnings is good, it didn't wow people. It didn't meet the expectations. It wasn't as good as they anticipated, even though it was a beat or something lame like that. So UPS got clobbered. I'm glad I got out. I did get it at 180 calls at 67 cents right here, and they went to 81 cents. And like, oh my God, I'm going to take it. I'm going to take it and get out. I was worried about, like I said, FedEx just ramping into earnings and UPS ramping up on it. That it'd have to be perfect. And to me, it just I didn't like it, and I got out quick before I did, and I'm kind of glad I did. So that's the logic behind that. I mean, if FedEx beat and UPS went to 180, whatever, I don't care, whatever. I got out green. I made a little bit of money, and I didn't want to risk it. I just had a feeling, I had a gut feeling that just something didn't seem right, and I'm glad I listen to my gut. Once in a while I do. So on Friday, I had 7 trades and 2 losses, and I was 90% all week. I was 90% going into Friday, and I screwed it up. So whatever. It is what it is. The first one I had was it wasn't UPS. It was FedEx. Not FedEx. I have FedEx and UPS on the mind. I had Facebook. There we go. Finally. I had Facebook puts, 272.50 puts at 93 cents. It's pushing up pre-market. The first 10-minute candle's right there. It had a big 10-minute candle, and I ended up grabbing it right when it broke down below. I mean, this is yesterday's support, the 274 area. When the next candle popped up, and it didn't really try to get any momentum. It rejected VWAP and the EMAs at 20 and the 34 or 37 that it came back down. So I grabbed the puts on those, and they went from 86 cents to 121. So that was a Good move. Then I ended up grabbing before I get into the next one, I had Home Depot. I had a Home Depot for like, Home Depot HD, not GD. Yeah, I can't type right now. Okay. Now I had Home Depot from alerted from last Monday on the right here. I alerted Home Depot. You have to look in the room. Let's see. Yeah. I don't remember the exact time, but I alerted the Home Depot 12/18/275 calls at 86 cents, which was right in here. I would imagine it's right in this area, right in here. Now, I was playing the daily on this play, so let's switch to the daily. Now, I was playing it right here. This is 7th. I got it right here. And on the 8th, it pulled back down because right in this area, it bounces in this 263 area. So I grabbed the 275 calls, thinking it was gonna do like it did right here and here. It was just gonna be a red day, then violently bounce. And the next day, it did drop, and I wasn't too worried about it as long as it stayed above the 200 EMA. And when it made this little hammer on the daily, I was a lot more confident in the play, and so. The play was deep red, so I just held it because my thesis was based on the daily. Then you had these green days right here, and this little chop city just killed theta a little bit, and it just as it's going up, the calls were going down because time was going against it. So then on Friday, when Thursday and Friday when it actually popped, this last couple of days, they were actually went green, and I ended up. And I'm getting rid of them in the morning. So those calls that I held for almost 2 weeks, a full 2 weeks, went from 86 cents to $1.21, and right here. And I'm glad I dumped them at open on Friday because it popped up. They went in the money. So my daily was right. I was actually thinking it was going to do this. I mean, when it bounced in this 265 area, that 1, 2, 3 days, I went to 287. So I wasn't thinking we're going to get there in 3 days, but I was thinking, a week, give it a week, it will get to 280 plus. But right in here, it struggled right in this little area. 265 had a real hard time getting over 265. It got over it and pulled back down. So it was very annoying to watch it in this area. So, but I just trusted the chart. And it stuck with it, and it did pull off. It was kind of very annoying to watch, but it did work out. So with that said, I'll get back into. Then I had Roku. Roku was the first loss of Friday and my second loss of the week. Let's see. I grabbed them at, right here. Big green candle, big red candle, thinking we were going to just dump right in here through this white lines the previous day close. It was going to dump below that and got below 327. We were going to see a nice little dump on that. Then it just popped. So that was a loss on Roku. Then I had BA puts. Again, BA, loving BA. I had BA. This is not showing 956, which is right here. Popped up, came back down through the previous day close, which is the white line. I got them at 47 cents. They ended up going from 47 cents to 76 cents if he held all the way through, and the chop right there. Now, if this drop right here happened right here, they would have gone 100%, no problem, maybe even 200%. But on Fridays, theta is just working overtime and just destroying everything in its path. So even if you're right, you can be wrong. Then I had Netflix puts. Let's see, 525. Okay. Now I had, you can see the trend line up here, the 536 area. It got almost there and rejected. It got there and rejected. I grabbed it at 1114, which is right here. right in here. You can see it drop back up. It started to break out, and I just didn't think it was. I thought it was going to double top, which I was sure about. I wasn't sure, but that's what was my thinking. And it started to pull back. I grabbed them. I grabbed the 525 puts at what time? 11:14, which is right here, right in this candle. So they went from 37 cents to 48 in this little drop right there. Then I ended up grabbing them again. Friday, like I said, data is working overtime. It's just you don't want to hold, you want to get in and out. I grabbed them again at 11:58, which is right here. Come back down. I'm glad I got out right there. It just I was able to get back into position again. I got the same puts. I got the 525 puts. I've got them at 35 cents. So I bought them for 37 cents right here, and they went to 48 right there. Then I bought them again right here, a little lower than where the 48 was. 48 cents was right there, a little lower, and I got them at 35 cents, which is cheaper. And this little dump, they went from 35 to $1.08, so that ended up being a 200% move. So these little small consolidations or chop right here, just they do a number on Fridays. So that's why you got to get in and out and stuff like that. And I was thinking, okay, I'm 90%, 91% for the week. Do I take another trade and screw it up? I didn't want to take one. I was going to finish the day and say no. And then I was looking at Facebook at what time did I grab Facebook? 1:49. Right here. Right in here. I was like, no, I don't want to take it. And I was like, okay, we get a nice descending triangle right here going on Facebook. And I was thinking, okay, this is probably going to be almost a sure winner right here. And I'll risk the 91% or 90% I have right now. And then so I grabbed the 270 puts at 50 cents, and it popped. And that just brought me below 90% for the week on the win-loss. I was not happy about that. I mean, these descending triangles are very, very accurate most of the time. So when I saw that, I thought for sure I wasn't going to screw up my thing, but I ended up doing it. So that was the third loss of the week, and that got me below 90%. So I was a little salty about that. So I just called it a day. I wasn't going to take any more trades and making my little win rate ratio lower than what it was and make another dumb mistake. So I just called it a day. So that is the weekly recap. I hope this has helped, and hope you understand the mindset that goes on behind my thinking, and why I took things and what I was doing. So make sure you subscribe to the channel, like the video, please. It helps out a lot. And thanks for watching.